Hey everyone, and welcome back to the channel. Today, we're tackling a topic that's on everyone's mind: building wealth. But we're not talking about risky day trading or get-rich-quick schemes. We're talking about smart, simple, and powerful strategies that you can set up once and let them work for you in the background. These are the set-it-and-forget-it methods that can quietly build your fortune over time, without you having to check your portfolio every 5 minutes. Sound good? Let's dive into the 3 best ways to automate your wealth-building journey. First up, and this is the absolute cornerstone of passive wealth creation, is investing in broad market index funds, or ETFs. Now, I know what you might be thinking. Investing sounds complicated and scary. But what if I told you there's a way to own a tiny piece of hundreds or even thousands of the biggest companies in the world with a single purchase? That's exactly what an index fund does. For example, an S&P 500 index fund tracks the performance of the 500 largest publicly traded companies in the United States. When you buy into it, you're not betting on one single company to succeed. You're betting on the overall growth of the American economy. History has shown that over the long term, despite the ups and downs, the market trends upwards. The set it and forget it part comes from a strategy called dollar cost averaging. Instead of trying to time the market, which is nearly impossible even for the pros, you commit to investing a fixed amount of money at regular intervals, say $100 every month. You can set this up automatically through your brokerage account. When the market is high, your $100 buys fewer shares. When the market is low, your $100 buys more shares. Over time, this averages out your purchase price and reduces your risk. You're consistently buying regardless of the market noise. This disciplined, automated approach removes emotion from the equation and leverages the power of compounding. You set up the automatic transfer and you just let it run for years, even decades. It's the most reliable path to long-term growth for the average person. The second set-it-and-forget-it strategy is maximizing your contributions to tax-advantaged retirement accounts. Think of things like a 401k, if you're in the US, or similar employer-sponsored plans in your country, as well as individual retirement accounts like a Roth IRA. These accounts are pure magic for wealth building, primarily because of their tax benefits. With a traditional 401k or IRA, you contribute pre-tax money, which lowers your taxable income today. The money then grows tax-deferred, meaning you don't pay any taxes on the interest or capital gains year after year. You only pay taxes when you withdraw the money in retirement. Even better is a Roth account. With a Roth IRA or Roth 401k, you contribute after-tax money, so you don't get a tax break now. But here's the amazing part. Your investments grow completely tax-free, and all your qualified withdrawals in retirement are also completely tax-free. Imagine decades of compound growth, and then being able to take all that money out without giving a single dollar to the taxman. It's an incredible deal. The set-it-and-forget-it aspect here is beautiful. You set up your contribution percentage with your employer for your 401k, and the money is automatically deducted from your paycheck before you even see it. It's a classic case of out of sight, out of mind. For an IRA, you can set up automatic monthly transfers from your bank account. The key is to contribute enough to get your full employer match if one is offered. That's free money you should never leave on the table. Then, aim to increase your contribution percentage by 1% each year. It's a small, painless change that can add up to hundreds of thousands of dollars over your career. You set it up, you automate it, and you let the tax advantages and compound growth do the heavy lifting for you. Our third and final set-it-and-forget-it method might surprise you, but it's incredibly powerful: real estate crowdfunding or investing in REITs. For a long time, the only way to invest in real estate was to buy a physical property, which involves huge down payments, mortgages, tenants, and toilets. It's anything but a passive investment, but technology has changed the game. Real estate crowdfunding platforms allow you to pool your money with other investors to buy shares in large, commercial or residential properties. You can invest with as little as a few $100s and get a piece of an apartment building, an office complex, or a shopping center, all managed by professionals. You get the benefits of real estate ownership, like rental income and property appreciation, without the headaches of being a landlord. An even simpler way to get started is by investing in real estate investment trusts, or REITs. A REIT is a company that owns, operates, or finances income-generating real estate. The best part is that you can buy and sell shares of publicly traded REITs on the stock market, just like you would with any other stock. This gives you instant diversification across a portfolio of properties with just one click. You get exposure to the real estate market, and these companies are legally required to pay out at least 90% of their taxable income to shareholders as dividends. This can create a steady stream of passive income. The set it and forget it play here is to choose a diversified low-cost REIT ETF, which holds shares in many different REITs, and then automate your investments, just like with index funds. You set up a recurring investment, and you let the dividends and appreciation build your wealth over time. It is a fantastic way to diversify your portfolio beyond just stocks and bonds and tap into the wealth-building power of real estate without ever having to fix a leaky faucet. So there you have it, 3 powerful set it and forget it strategies to build wealth on autopilot. Number 1. Consistently invest in broad market index funds through dollar cost averaging. Number 2. Max out your tax-advantaged retirement accounts like your 401(k) and Roth IRA. And number 3. Gain exposure to real estate through REITs or crowdfunding platforms. The common thread here is automation and consistency. The secret isn't in finding the next hot stock. It's in creating a simple, sustainable system that works for you over the long haul. By removing emotion and the need for constant decision-making, you allow the unstoppable force of compound interest to work its magic. Start small, stay consistent, and be patient. Years from now, you'll look back and be amazed at what your set it and forget it plan is built for you. If you found this video helpful, please give it a thumbs up. It really helps the channel grow. And don't forget to subscribe and hit that notification bell so you don't miss our next video on personal finance and investing. Thanks for watching, and I'll see you in the next one.